So I think if there's any lesson from my horrible experience, all the way down to the simplest of things, pay attention to your assets and stay on top of what you own. Don't just expect to earn the income and not be mindful of what's going on.
You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of coaching here at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Lila Ghani. She's the head of contracts here at Positive Real Estate across Australia and New Zealand. So today we discuss awkward neighbourly relationships and the potential for your property value to be impacted, challenges during the GFC and how she overcame some really tricky situations. And as a developer, because her and her husband develop outside of her role with Positive Real Estate, when developing goes wrong and how to bounce back from a 7-year Supreme Court case. So enjoy this conversation on all the advanced nitty-gritty with Lila. Alrighty, welcome to the podcast. So today I have with me the fabulous Lila Ghani. She's actually our head of contracts for Australia and New Zealand, I believe. And so, you know, she looks after everything legal that is Positive Real Estate, her and her fabulous contracts team. Unbeknown to many of you, she also has a background in development and successfully develops right across Sydney. So Lila, welcome to the podcast.
Thanks so much, Tab. Thanks for having me. Pleasure to be here.
Oh, no, I always feel like I twist your arm to do these things with me. But you really are a wealth of knowledge and we'd be lost at Positive without you. So I just wanted to tap in today because I know there's quite a number of clients that like the idea of investing. And so what would your advice be for a rookie developer? Because we were chit-chatting before about how it's possible still to make rookie mistakes even when you're quite experienced. Tell me a little bit about that.
Oh, yeah, look, you're not wrong there. Rookie errors can be made by very, very experienced developers, and we still call them rookie errors. I think I've been investing and developing mostly residential for at least 20 years now with my husband. So, you know, in addition to obviously my legal background, and he had a real estate background. So taking it right back, my husband obviously worked in real estate and he saw some amazing opportunity there. And then he honed in his skills in real estate and we started our own development company and started off doing little subdivisions and so forth, and then moved on to apartment blocks, which is, you know, pretty much what we did for quite a period of time. But anyone can make a rookie error. I mean, if you are not familiar with, you know, things like the zoning requirements of certain areas, if you're just looking at a property and thinking this is just great for developing, you've made the error already. You need to understand the town planning mechanisms. You need to understand zoning. You need to understand soil conditions, height, you know, things like height restrictions if you're looking at that sort of a thing. Even something as simple as just a 2-lot subdivision, you know, what are the parameters around a 2-lot subdivision? There's minimum lot sizes, for example. You might think that you can subdivide something into 2 lots because it looks like you can, but that particular council has limitations in that space. So you really need to do your homework and you need to have your eyes wide open. And I think something that is really important, and it is a cost, but it's a cost that's very well borne. You need to surround yourself with some really good consultants. So my husband and I have an amazing team of consultants. We've got like engineers, we've got landscape designers, We've got consultant town planners that we work with. They're the type of consultants that we've aligned ourselves with so that we don't make mistakes, or we learn
surveyors
from
and
mistakes.
legal
And so forth. You need to have a team that are there and available to you, because if you don't have them, then it's very hard to get what you want at short notice. Sometimes if you're buying on speculation, for example, you need some answers really quickly. And we kind of tend to have this group of consultants that we work very closely with. And a bottle of wine at Christmas doesn't go too far. You make sure that you take care of them as well, so that they can you.
The bag of carrots, as Jason says, the bag of carrots.
Don't forget your hampers at Christmas, and just that thank you for being on side type of a thing. So that if you need anything, if you want them to answer the phone, they answer it straight away.
You have to be numero uno client.
That's right, number one.
Oh, that's good to know. I mean, who doesn't like a hamper at Christmas? Not that I'm hinting at all clients, hint, hint. We all appreciate a hamper. And so tell me, your role at Positive Real Estate, how does your development experience and obviously your legal background's key to being head of contracts, that goes without saying, but tell me, how does your development stuff, how do you work in with the team? Because you work closely. Your husband, Sam, I'll just clarify for clients that don't know you, your husband is Sam, who is separate to Sam Saggers, who is, of course, our CEO here. So our property guru. So we might differentiate that by if you refer to your hubby as your hubby Sam, and we'll call Sam just Sam. So you work very closly with Sam Saggers and the acquisitions team when they're out negotiating deals, working with developers. Tell me a little bit about your role, because I don't want to put words in your mouth as to what you do.
Okay, so I think I jump into the process of, into my role at a point where acquisitions have sourced some quality stock that they'd love to present to our clients. And it's at the time when they know that's the stock they want to list. I jump in and I review the actual contract of sale, and I go through that contract of sale with a fine-tooth comb. I look for any adverse conditions in there. I look to see if there are any easements or covenants. I look to see if there is anything that's negative in the actual contract that probably hasn't been picked up, because you don't necessarily pick up on issues just from looking at the site and working out what sort of, what the development looks like. So the contract usually is the dictator of what's involved in the process of contract for sale. I work with our recommended solicitors so that we can negotiate some extra conditions that are favourable to our clients. So we're very strict at Positive Real Estate, and we like to protect our clients in a way that perhaps you wouldn't get the same sort of protections if you purchased, like in the retail space or outside of Positive Real Estate.
As a single person.
We make sure that all of our clients are protected with certain conditions, like finance conditions for existing stock, or extended settlement periods for some contracts and so forth. We negotiate the sunset. Well, we try to negotiate sunset dates. That's one that's very tricky because it's set by lenders. But the defects period after you've settled, or inspection processes and so forth. So we really go into the nitty-gritty and make sure that there's nothing untoward in the contract, that the clients are fully protected. We do checks on the developers, checks on who, you might notice that sometimes the seller on your contract is not the developer that we're presenting to you. It could be the name of a big conglomerate of developers like Aria Group or Blue Earth Group, for example, but they're not necessarily named on the contract. And we go through the nuances there of ownership and who owns what, and if there are any options and so forth in the contract. So very much the detail. I think it's that fine detail of the contracts that we go through before we even present a deal to anybody at PRE.
And your job really is to protect the clients, and by protecting the clients, we have happy clients, and we protect the business that is Positive Real Estate to coach and mentor clients in investing. because sometimes life happens, right? And it gets sticky out the other side. And I know I've had my challenges with property and investing, particularly when the GFC hit. That threw a curveball for many of us. I was a low doc borrower. I was living off my investing. And so when lending changed dramatically, it threw a few curveballs that we had to work through. And, there were a couple of sleepless nights if I understate it dramatically. And so our job is to try and make sure that our clients don't go through that, right? And I know you've certainly had your fair share of dust ups, which I think, correct me if I'm wrong, but when you're doing more advanced stuff, and everything you do is far more advanced than I ever did, but the more advanced you do, the more problems you're creating for yourself to manage and work through. And so you build up a lot of muscle around what's a normal problem, an abnormal problem, what to get worried about. And sometimes when we're coaching clients, we'll pull yourself in, myself in, when it's around trickier stuff, because it may not seem that momentous to us having done this other stuff, but relative to a client's experience, it can be really nerve-wracking. And so talk me through, we work really hard to make sure that clients don't have a financial challenge when life changes for them. So examples of that would be people lose their job right before they're due to settle a property and the bank has found out. I had one lady who was the major income earner, and she got pregnant and the project was delayed, and right when she had the baby, they were called for settlement, and she wasn't working. She didn't get maternity leave. She was a contractor. So suddenly she couldn't get finance. So tell me, how do you and the contracts team mitigate that risk for clients?
Yeah. So obviously life throws curveballs all the time at everybody. I don't think there's anybody that hasn't had some sort of a curveball thrown at them. And, the contracts process is not linear either. So, we might think it's all exciting when we purchase a property and it's, we have an anticipated settlement date. And I think what you're referring to is mostly in the longer term sort of purchase off the plans. Where, everything looks rosy, no intention of falling pregnant, no intention of COVID hitting and me losing my job and so forth. And you've got something that needs to settle in about 2 years' time. So contracts work very, very closely with the developers. The relationships that we build, this is something that endures and is ongoing throughout the entire process. So it's not just like when you see a solicitor and you go and transact your conveyance and you sign your contract and you're exchanged, and then you hear from your solicitor again when it's time to settle. That is not the way contracts within PRE works. We are constantly in communication with the developers. We're overseeing the progress of construction. We're overseeing delays in construction. We can see if a project is going to be delayed by 2 months, 3, 6, 7 months or what so. And then we do check-ins with our clients as well at regular intervals to make sure they're okay. Or sometimes it's flagged with us that the client has had a change in circumstances, and that's where we jump in and we try and negotiate on behalf of our clients to somehow extract them from the contracts. And it's a very thorough process, and we work really hard to do that. Obviously, it doesn't work in 100% of cases, but let me just say, and Tab, you'll attest to this, our strike rate has been amazing, and we don't lose, but we actually hang our hat on the fact that, we haven't lost clients' deposits, that we've been very successful in extricating clients. Obviously, not because they've just changed their mind. That doesn't work. You can't just change your mind. But where there have been real circumstances and issues that have changed a client's ability to settle, then we've jumped in and we've been able to successfully negotiate with developers to extricate them and find replacement buyers. So it's a really special thing about positive real estate. I've never seen it anywhere else. And it's one of the reasons I love being here. It's our ability to do that, and it's reputational. It's PRE's reputation in the industry that allows us to do that.
Yeah, 100%. Because I mean, buying off the plan can seem scary, right? Because you don't know what your circumstances are going to be. You can't apply for finance in 2 years' time. So there is a certain, if I say it, hanging by the seat of your pants feeling. I mean, the coach and the property consultant will do all the checks and balances. They qualify, make sure that, you know, they can't see any headwind, any trade-offs or challenges that you need to be aware of. They'll obviously cross off and talk you through. But then we do have this additional safety net of the contracts team headed up by Lila that have this capacity to protect clients in that space, which is awesome. And so for yourself, you've had a couple of dust ups. I've got a hedge on my mind that we'll talk about in a second. And this might seem like a small one, but I just think it's so funny because I had a similar thing happen to me. So Lila, tell me about the hedge, because I love this story.
Yeah, look, I've had big dust ups and small dust ups. To me, this one, whilst it might sound like a smaller dust up, to me was just quite personal. So I'd spent 12 years growing a Leighton, if anybody knows what Leighton greens are, they're those beautiful green tree-like hedges that grow forever, and you can form a perimeter boundary fence just with those. You don't actually need a fence. The greenery forms that perimeter for you, and it's so slick and clean. And our neighbour, our hedge was overhanging their fence, and mind you, it made their property look amazing because they got the benefit of that perimeter as well. Beautiful. But you know, we had some issues. We had some issues with the neighbour, and they took it out on our hedge. And they just completely shaved down the hedge by about 30 to 40 centimeters, which shocked it and then killed it off. And so now I have my boundary completely exposed. I hate my neighbours. It is deemed a boundary fence issue between neighbours, and the only way you can resolve these issues is to try and do it amicably, or to try and do it through fair trading. But you know, that doesn't get me anywhere because my hedge is gone and it can't be replaced. So I can't believe you reminded me of that. Now I'm upset again.
Well, I always have a giggle about it because I did a similar thing to my neighbour. And I was that neighbour, and I'm very ashamed. I'm very ashamed. The tree didn't die; it just looked a bit odd for a bit. It's grown back, but it was just over on. It was ruining my curb appeal at the front. It had grown right over and was hiding half of the house, and so I just shaved what was up to my boundary, and then in my head it sounded like a really good idea. And then Vin came in, and I was in a meeting, and he said, the landscaper's out there. He's about to shave the head. He's asked, "Are you sure?" And I was like, yeah, just fucking. And I came out, and I was actually quite embarrassed. And there was a poor little possum in the middle of the tree that had built a little nest too. And he was sitting there, and he was like, he's lost half his home. And I was too embarrassed to say anything today, but I was that person. I was the bad person. So they probably hate on me. They've been very generous. But the reason I talk about this is it does impact the value of your property. And this is why it's so freaking annoying, right? Because like if you were to get a valuation with the hedge there and without the hedge, how much would it change that valuation by?
Oh, look, absolutely. I agree wholeheartedly with you. It's an eyesore for me now. It's absolutely an eyesore, and I don't think it will recover anytime soon. So unless I decide to sit tight and not sell my property, I have to accept that garden aspect and that whole beautiful greenery, which, you know, is what has increased the value of the property, has now just dropped considerably. And you know, it's just awful. And I think it's a lesson to everyone, though, to try and form some sort of diplomatic relationship with your neighbours and actually listen to what they're saying. And I think this is where we went wrong. They were telling us to trim it back. We kept saying we would, and we just didn't, because we loved it so much. and then they just took it upon themselves to trim it. So yeah, try and have a bit of an amicable relationship with your neighbours, at worst, not at best. At best is an awesome relationship. At worst, you need to have an amicable relationship with your neighbours and make sure that those perimeters which form a part of your home and the value of your home are actually well protected as well, not just the actual structure on the inside of your boundary. That outside of the boundary sometimes is what has a lot of value.
Yeah.
Yeah.
Well, it is. It's true. And any other dust ups you want to share? You've got a wide and varied career and
I have
development. You must have a couple.
Yeah. Look, when I first started at PRE, obviously you took me on board with all of my quirks and nuances. I was stuck at the time in a Supreme Court case that had been dragging on. I think at the time it had been dragging on for about 5 years, and there was 2 years left of it. So for 7 years, 7 years, just off the back of the GFC, my husband and I also had a large amount of low doc loans. Anyone that, can remember the GFC will remember how easy it was to get loans.
You wrote it on a bit of paper, didn't you? I remember literally saying to the broker, what income do I need to declare to service? He said 300K. And I was like, all right. I expect to make 300K. Like it wasn't that you'd made it. It was just that what you were estimating you would draw down.
It was based on the estimation of what you think that you were going to make. And
they were happy.
Absolutely. And the lenders were vying for your business. So we fell into that trap, obviously, and we were just happy-go-lucky. And we had purchased multiple development sites. And then the GFC hit, and we ended up being extremely, not even asset rich, because the loan amounts were higher than the end value of what the properties were, because they hadn't been, the development potential hadn't been realized. So you've got to remember, with development sites, you have to realize the development potential, or the bank has to be very much confident of the development potential. And then when the GFC hit and units took a hit, obviously the development potential wasn't something that they could factor in. And so we were heavily leveraged, and we had to get out of that without, obviously we didn't want to go down the bankruptcy path or anything. So we wanted to outsmart the lenders, and we offloaded some of our properties to a partner. And, we got rid of the mortgages and so forth. But unfortunately, our partner at the time was very unscrupulous. And because we were so busy concentrating on the lenders and the loans, we weren't concentrating on the business partner. And we ended up, like I said, 7 years of, you can never get that back. And you have to be meticulous, absolutely meticulous when it comes to your paperwork. And if you are doing any sorts of deals and so forth outside of what I would call a normal process, you make sure that you're ticking all the boxes, that you're still seeing a solicitor, and again, I can't stress enough, you have to be meticulous with your paperwork, and you have to be, I'm guilty of it, and I more than anyone should not be guilty of it. When you just forget about things and park them and you think they're just sorting themselves out. When we have assets, we need to be paying attention to our assets. What are our assets doing? Where are things at any given time? True. Pay attention to your assets. I say this about strata. I say it about property management. And I just, I will yell it, from the rooftops. Pay attention to your asset and what's going on with it. I think we all fall into the trap of, we get our rents at the end of the month. Half the time we don't even look at our rent statements. I know I don't. I just collate them at the end of the financial year when I'm getting
them to Vin.
Yeah, right. And as long as the rent's coming in, and every now and then you'll notice that the rent hasn't hit the account. But am I noticing what's actually being said by the property manager? Am I noticing if I've approved any additional costs that, when you sign up your lease, they're allowed to spend a certain amount? So please pay attention to your assets. Strata is exactly the same. We forget about those minutes, the general meetings and the AGM.
Or we just don't read them.
We don't read them. We don't know what the motions are. And all of a sudden we're hit with a massive levy, and we scream that we don't know about it when we really did know about it, or ought to have known about it, because we weren't paying attention to our asset. So I think if there's any lesson from my horrible experience, all the way down to the simplest of things, pay attention to your assets and stay on top of what you own. Don't just expect to earn the income and not be mindful of what's going on.
And it's not that passive at all.
Yeah,
it's not a passive investment.
That passiveness is not healthy for you to get the best value out of your investments.
And so just close the loop for me. So what was the outcome? Because I remember you'd started and you and I initially didn't have a lot to do with each other. I was heavily in the coaching headspace. You were up in Sydney, I was in Melbourne, and we knew of each other, we dealt with each other, but we didn't have the close working relationship we have now. Yeah. And I was aware that you were going to court and that was all stressful for you. But so tell me, what happened? Did you end up getting a favourable outcome?
Yes, we did. We ended up winning the case after 7 years. But what we didn't win was the loss of opportunity, obviously. And again, loss of opportunity is a huge thing. So whilst we were able to recoup all of our losses, we weren't able to actually realize the lost opportunity. So you imagine 7 years post GFC,
Sydney market.
In the Sydney market, our funds were all tied up for 7 years. And so that opportunity, we couldn't even, you
couldn't leverage against
quantify it. You could not quantify the loss of opportunity. And that would have meant another 2 or 3 years in the Supreme Court. And we just said, no, we'll win the case on its merit as it is. And we had to give up our claim for lost opportunity. And that was a huge lesson for us. And it was a reset, and we started again. And it's been awesome, obviously, because we've learned to be more careful, and we've learned how to mitigate risk in a much healthier way.
Right. And so how did you mentally, because so much of this stuff, like when I talk to people about their investing success, whether they're beginners or whether they're seasoned investors like yourself, so much of it comes down to mindset and managing your own stress, because what is stressful to one person is, water off a duck's back to another. And it never ceases to amaze me how different we are and how we manage stress. Yeah. So how do you get through having to reset that? How do you let the loss go? How do you get back on the horse and not be, and not have some kind of post-traumatic stress with it? Or do you, and you just get on with it and it fades over time? Like, explain that to me.
I think it's a work in progress. I don't think there's just, there's no special sauce for it. Yeah. I think what really helps is if you started from a certain point, then that's your anchor point. My husband and I started from a lower point in our investment journey. We were, very young when we got together.
Tell me that story.
So I've been with my husband for many, many years. I actually ran off with my husband at the age of 18, and I thought I was being super smart, super rebellious. And I pissed my family off in the best way I could, because, I grew up in a very conservative, traditional family. And it was like, this is the opposite of who I was. I grew up, I went to, little Catholic school with nuns, and that's pretty much who I was. And then I ran off with my bad boy boyfriend when I was 18 and he was 20. So when I say that our anchor point, that was our baseline. We started with nothing, and it's not that it's easy, but it's easier to reset and restart when you know that you came from nothing and you actually worked to get to where you were yourself. You know that you can do it again. And, and I know this sounds very romanticized and very, probably not even credible, but the truth of it was that we were healthy. We were still fairly young, at the time we were in our 30s. We were still fairly young. We had awesome family. We had beautiful children, and we had skills, and we knew that we could utilize our skills. That's something that, we didn't lose. You don't lose that when you lose money. You don't lose your skills and your expertise and your experience, and you can hone in on those skills and the experience and the expertise and just start again. And you start again in a more mindful manner and a slower manner. So, yes, we wanted to get to the mountain again, but we were very, very careful how quickly we did it the second time round. And we pulled right back and started doing 2-lot subdivisions. So we went from unit developments when the proverbial shit hit the fan, to just resetting all the way back. And it was just 2-lot subdivisions. We'd find corner blocks. Sam is very, very experienced at reading council plans and what we call LEPs, local environmental sort of plans and DCPs and zoning. And he'd spend nights poring over all the different planning and all the different development plans and so forth to find corner blocks that looked like they could be ideal for subdivisions. And that's what we did. We even door knocked on a couple of corner blocks and convince people to sell their houses to us.
That's awesome.
Did it really, really slowly that way.
Yeah.
So
and
yes,
he does it full time, doesn't he?
He is a full-time developer. That is his absolute day job. I'm just his sidekick now.
I don't think that's true for a second, and I don't think he'd say that. I know how much he dotes on you. Lila and I have a joke about our husband baristas that just make us the best coffee in the world. Lila talked me into a coffee machine purchase, and I was very dubious at first, but I am forever grateful. It was one of the best purchases I've ever made. And Vin is my hubby Vin is our barista, and I know Sam is your hubby Sam does an amazing job with the coffees.
He is absolutely ultimate barista. And if there's anybody in the audience that actually drinks coffee, you will know that coffee is very palate specific. And if you get that coffee taste right, you can't emulate it anywhere else. And so Sam has perfected my coffee so that it's perfect for my palate. And now I can't drink coffee anywhere else. And if I go to a cafe, I complain. So I'm forever complaining about coffee unless he makes it for me.
That's going to be our mission when I see you in Brisbane in a couple of weeks, to find a good coffee place, because we're both going to be bereft without our hubbies.
We are.
And so to wrap up, if I can ask the classic podcast question, you meet Lila, 20 years, young Lila, you see her in the street. What advice would you give young Lila if it was possible to time travel, about the future, about opportunity, about what advice would you give Lila?
Oh,
Lila.
This is something I have mulled over. In fact, I've even done it now, thinking backwards. And I think to myself, I'm, Sam and I my Sam are very yin and yang. He's the eternal optimist. He's the glass half full. I'm the glass half empty person. And I think that's why we work so well. If I could tell myself anything, it would be just to loosen up a bit and take more risk, I think. I would probably take more risk. I am very measured in my risk taking. I am extremely measured, in fact. I analyze risk well, and it's probably why I have the role that I have here at PRE, right?
Oh, we love your risk management.
So I'm a bit risk averse, and I would love to be more like my husband. Sometimes I look at him and I very much admire his ability just to see potential everywhere. And if I could say that to myself, it's just like, just open your eyes and see the world differently and look at more potential. I think that's what it is. Take more risk in anything you do, whether it's, the things you'd love to do but not quite do, not just in business, but in life itself. I think that's
Dance in the rain.
I have puddles, but I think so.
Jumping puddles. I'm forever trying to get the team to do dance breaks, but I have very few followers in that space. We're also worried about looking like dicks, aren't we? So anyway, we'll leave it on that note. Don't worry about looking like a dick. Thanks, Lila, and thanks for sharing your stories. It's immeasurable value to people to hear everyone's stories. And what I love about your story in particular is the tenacity that both you and Sam have. And what you guys may not have picked up from this is the relationship that has been maintained with you and Sam? Like, you guys have been together how many years now?
We've been married 35 years.
35 years.
I know. When I say it out loud, it seems so wrong. At one point we thought we should just divorce and start again so that we've got a break and we can say, oh, we've only been married like 10 years or something. Because that just sounds, I think 35 years and I think of old and decrepit, but we have just got another half century to go at the rate we're going. And I adore him. I love him more now than I did when I met him. And it's, we've just been through good, bad, ugly, and some awesome times as well. Yeah.
So what I'm hearing is work at it. Don't give up.
I'm tenacious.
Well, you took a bit of a risk, a bit of a gamble on eloping with your hubby, and didn't that pay off?
It did. And there we go. There's the lesson. I have to do more of that and less of being careful.
We'll go run riot when I see you in Brisbane.
Okay.
Awesome. Thanks again, Lila. Much appreciated.
My pleasure.
Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.